It looks like for we're saying an adjusted earnings per share of 27 cents, which would almost double the estimate.
Exactly. Yeah. So the adjusted is 27 cents, and then the non-adjusted number is 20. But the analysts' expectations were 14. So if you look at the comparable,
it's pretty good. That's why
we're beating
it's up,
on both. Yeah. And revenues here for Macy's are in line at $5.4 billion. Look at those comparable sales, too. We like to look at the owned plus licensed number. Those are up 3.3%. And that does mark 4 straight quarters of gains for that comp number. And that started last holiday season. The online sales for Macy's, again, growing double digits. That actually makes it 37 straight quarters of double-digit growth online for Macy's. And Macy's is, again, raising its full-year revenue and earnings guidance forecast, as Joe suggested. It did it last quarter, too, and now Macy's is expecting comparable sales for the full year to be 2.3 to 2.5%. That's up from 2.1 to 2.5%, and earnings to be between $4.10 and $4.30 a share for the full year, from $3.95 to $4.15. And I got to speak to CEO Jeff Gennette on the phone briefly. He says October was the strongest month of the quarter for Macy's. Colder areas of the country's performing the best, especially the last 3 weeks in October. Traffic positive in all months, again, stronger in October for Macy's. And Gennette did say that tourism is a headwind at both Bloomingdale's and Macy's. While the first quarter was quite strong for tourism in the country, the second quarter cooled, and then this third quarter was actually negative. Still, though, transactions, Gennette says, and Macy's were up. The average unit per item, the average unit retail, that was up 3% over last year. And then Gennette says Macy's does have the ability to beat last year's fourth quarter comp when that strong run continued. And Gennette told me, quote, the backdrop for consumer spending is good. Their confidence is strong. The .com business is really humming, and our penetration is higher in the fourth quarter. For stores, we're going into the fourth quarter with momentum. So we know that it is going to be a big test. And you might remember last year on Black Friday, Macy's had some snafus with their transactions, both online and in store, for some part of the day, with folks having a hard time checking out. But Gennette says, we've battle tested the pipes. We are ready. We can handle it this year. And he sort of laughed when I asked him about it, because they knew it was a pain point for a big day.
Hey, Court, the sales came in basically in line with expectations at $5.4 billion. So what did the street miss? Why was the earnings per share number almost twice as strong?
Yeah, that's a good question, and I just haven't had a chance to dig into that yet. I'm not exactly sure, because as you can see here, they just crossed, but the revenues were exactly in line, and then those earnings were much stronger. We know the average unit retail was higher for the price, so the margin was more than likely stronger than analysts had expected there.
I also see some asset sale gains. Maybe the
real estate asset sale gains are in there too, and we've been dealing with that for several quarters. That was a big one last quarter too, that changed the earnings. We initially, I think, had looked at like 59 cents per share, and then we ultimately said, no, it was 70 cents. So it was an 11 cent difference.
An extra 10 cents
for the asset gain
share just attributed
for real
estate asset sale.
Because they're still going through monetizing that portfolio and working with Brookfield. So that makes the numbers a little messier than maybe a real clean quarter to look at the sales and the profit in that way.